While you were scrolling through your phone, China just made a move that could shake the entire global financial system. Right now, the People's Bank of China is quietly stockpiling gold and silver at levels we haven't seen in decades. We're talking about adding over 300 tons of gold to their reserves in recent years, and that's just what they're admitting to. The real numbers? Probably much higher. But here's where it gets interesting. They're not just buying precious metals. They're actively moving away from the US dollar. China's been dumping treasury bonds, signing oil deals in yuan, and convincing other nations to do the same. This isn't random. This is strategic. So what are they preparing for? A financial crisis? A dollar collapse? A complete reset of the global monetary system. Some analysts believe China is positioning itself for a future where the yuan, potentially backed by gold, becomes a dominant reserve currency, challenging America's decades-long stranglehold on global finance. And it's not just China. Russia, India, and even Saudi Arabia are loading up on gold like there's no tomorrow. Central banks worldwide added over 1,000 tons last year alone. That's a coordinated shift, not a coincidence. The question isn't if something big is coming. It's when and whether you'll be ready for it. If this just blew your mind, smash that like button right now. Let's get this information out to more people who need to see what's really happening behind the scenes. Alright, so let's dive deeper into what's really happening here, because this story goes way beyond just China buying some shiny metal. What we're witnessing right now is potentially the biggest shift in global financial power since the end of World War II, and most people have absolutely no idea it's even happening. Let's start with the basics. For the last 75 years or so, the United States dollar has been the undisputed king of global finance. Every major commodity, from oil to wheat to copper, gets priced in dollars. Countries around the world hold dollars in their reserves. International trade happens primarily in dollars. This system gives America an enormous advantage because it essentially means the US can print money and the whole world has to accept it. It's an incredible position of power, and it's made the United States the dominant economic force on the planet. But here's the thing about empires and dominant systems. They don't last forever. History shows us that every reserve currency eventually gets replaced. The British pound used to be what the dollar is now. Before that, it was the Dutch guilder. And before that, other currencies held sway. The average lifespan of a reserve currency is somewhere between 80 and 100 years. The dollar has been the global reserve currency since 1944. You do the math. China knows this history better than anyone. They've been studying it, planning for it, and now they're actively positioning themselves for what comes next. And their strategy is absolutely brilliant when you break it down. First, let's talk about the gold accumulation. Official reports show that China has been adding to its gold reserves consistently, but here's where it gets really interesting. Most financial analysts believe that China is actually holding far more gold than they're officially reporting. Why would they hide it? Simple. If the world knew exactly how much gold China was accumulating, it would send shockwaves through the markets and potentially drive up gold prices before they're finished buying. It's like playing poker. You don't show your hand until you're ready to win the pot. There's evidence to support this theory too. China is the world's largest gold producer, mining over 370 tons per year, and virtually none of it gets exported. It all stays within China. On top of that, China imports massive quantities of gold from other countries. We're talking hundreds of tons coming through Hong Kong and Shanghai every single year. All of this gold is going somewhere, and it's not ending up in jewelry stores. It's going into vaults, into reserves, into the foundation of what many believe will be a future gold-backed yuan. Now, why does gold matter so much? In our modern world of digital banking and electronic transfers, gold might seem like a relic from the past, but gold has properties that no fiat currency can match. It can't be printed. It can't be created out of thin air. It has intrinsic value that's been recognized by human civilizations for thousands of years. When currencies collapse, and they do collapse throughout history, gold remains valuable. It's the ultimate insurance policy against financial chaos. Think about what happened during the Great Depression, or the hyperinflation in Germany after World War I, or more recently in Venezuela and Zimbabwe. Paper money became worthless. People were using banknotes as wallpaper because that was more practical than trying to spend them. But gold? Gold maintained its value. People who held gold could protect their wealth while everyone else saw their savings evaporate. China understands this lesson intimately because they've experienced currency crises in their own history. Silver is part of this equation too, though it gets less attention than gold. China has been accumulating silver reserves as well, and silver has unique advantages. It's more affordable than gold, making it accessible for everyday transactions. If you're trying to build a precious metals-backed monetary system, you need both gold for large transactions and wealth storage, and silver for smaller, more practical exchanges. Throughout history, this is exactly how it worked. Gold was for the wealthy and for major transactions. Silver was for common people and daily commerce. But silver also has massive industrial applications that make it even more strategic. It's used extensively in solar panels, and China dominates global solar panel production. It's crucial for electronics manufacturing, and China is the world's factory for consumer electronics. Electric vehicles require silver for their electrical systems, and China is leading the global transition to electric transportation. By controlling silver supplies, China gains leverage in multiple critical industries simultaneously. It's not just about money, it's about controlling the resources that power modern technology. The precious metals are just one piece of this puzzle, though. What China is really doing is building an alternative financial infrastructure that doesn't depend on the US dollar. Let us talk about what that actually looks like in practice, because the details reveal just how sophisticated and comprehensive their strategy really is. Over the past decade, China has been setting up currency swap agreements with dozens of countries around the world. These agreements allow countries to trade directly in their own currencies without converting everything to dollars first. China has these arrangements with Russia, Brazil, Iran, Saudi Arabia, Argentina, Turkey, South Korea, and many others. Each agreement chips away at the dollar's dominance just a little bit more. Individually, these deals might not seem significant, but collectively, they're creating a parallel trading system that operates independently of American financial infrastructure. Then there's the Belt and Road Initiative, which is probably the most ambitious infrastructure project in human history. China is investing trillions of dollars into building roads, railways, ports, and pipelines across Asia, Africa, and Europe. These aren't just construction projects. They're creating trade routes and economic dependencies that position China at the center of global commerce. When a country accepts Chinese investment to build a port or railway, they're not just getting infrastructure. They're entering into long-term economic relationships that will naturally favor Chinese currency and Chinese trade terms. Pakistan's Gwadar port is a perfect example. China invested billions to develop this port, which gives them strategic access to the Arabian Sea and a shorter route for importing oil from the Middle East. But it also means Pakistan is economically tied to China in ways that make them more likely to accept yuan for trade, more likely to support Chinese political positions, and less likely to align with American interests. Multiply this across dozens of countries, and you see the bigger picture emerging. The oil situation is particularly crucial here. Since the 1970s, oil has been traded exclusively in US dollars. This created what's called the petrodollar system, which is one of the main pillars holding up dollar dominance. If you wanted to buy oil, you needed dollars, which meant countries had to hold dollar reserves, which meant they had to buy US Treasury bonds, which essentially meant the whole world was financing American debt, whether they liked it or not. This system has allowed America to run massive deficits for decades without facing the normal economic consequences that would destroy other countries. China has been systematically dismantling this system. They've signed deals with Russia to buy oil in yuan and rubles. They've made agreements with Saudi Arabia, the world's largest oil exporter, to settle some oil transactions in yuan. They've created yuan-denominated oil futures contracts traded on the Shanghai International Energy Exchange. They've convinced Iran, Venezuela, and other oil producers to accept yuan as payment. Each of these moves gives oil-producing countries an alternative to the dollar, and slowly but surely they're taking it. Now, imagine you're a country like Saudi Arabia. For decades, you've been locked into the dollar system because that's where the oil market was. Your entire economy depends on oil exports, and those exports were denominated in dollars, so you accumulated massive dollar reserves. But what do you do with all those dollars? You invest them in US Treasury bonds, which means you're essentially lending money to the American government at relatively low interest rates. And here's the kicker: the US can print more dollars whenever they want, which gradually devalues your reserves through inflation. But now China, which is the world's largest oil importer, is offering you a choice. You can keep selling oil for dollars like you always have, or you can sell it for yuan, and then convert those yuan into gold through the Shanghai Gold Exchange. Suddenly, you're not stuck holding paper currency currency that America can print more of whenever they want. You can hold gold, which has real tangible value that can't be inflated away. That's an incredibly attractive proposition, especially for countries that have watched their dollar reserves lose purchasing power over the years. This is why some analysts call China's strategy the petro-yuan system. It's designed to replace the petrodollar by offering something better, a currency backed by the world's largest economy and largest trading nation, convertible to gold through established exchanges, and free from American political interference. It's not just an alternative. In many ways, it's an upgrade. Speaking of American political interference, that's another massive factor driving this shift away from the dollar. The United States has weaponized the dollar in ways that have made many countries extremely uncomfortable. When America wants to punish a country, it can cut them off from the dollar-based financial system. We've seen this with sanctions on Russia, Iran, Venezuela, North Korea, Cuba, and others. These sanctions can be absolutely devastating because so much of global trade runs through dollar-based payment systems like SWIFT. But here's the unintended consequence that American policymakers did not fully anticipate. Every time America uses the dollar as a weapon, it gives other countries a powerful reason to find alternatives. Russia got cut off from SWIFT after the conflict in Ukraine, so what did they do? They developed their own payment system called SPFS and started trading with China, India, Turkey, and others in alternative currencies. Iran faced brutal sanctions that cut them off from international banking, so they started accepting yuan, rubles, and even cryptocurrencies for their oil. Venezuela, same story. These countries didn't just sit there and suffer, they adapted and found ways around the dollar system. China watched all of this very carefully and realized that their economy, their trade, their entire financial system could be vulnerable to American sanctions too. The US has already shown willingness to use sanctions aggressively, and there are politicians in Washington who openly talk about containing China or limiting their economic rise. From China's perspective, building backup systems and alternative payment networks isn't just smart strategy, it's essential survival planning. They're creating a parallel financial universe that operates independently of American control, so that if sanctions ever come, they can continue functioning without catastrophic disruption. The digital yuan is another piece of this strategy that doesn't get enough attention, but could be absolutely revolutionary. China has been developing a central bank digital currency for years now, and they're already testing it with hundreds of millions of users domestically. This isn't like Bitcoin or other cryptocurrencies. This is a digital currency controlled directly by the Chinese government, and it has some fascinating implications that could reshape international finance. For one thing, a digital yuan could make international transactions faster, cheaper, and more efficient than the current dollar-based system. Right now, sending money across borders involves multiple intermediary banks, currency conversions, compliance checks, and settlement delays that can take days. A digital yuan could potentially settle international transactions in seconds with minimal fees. That's a massive competitive advantage for any business or country that adopts it. It could also allow China to bypass traditional banking infrastructure entirely. Countries that lack sophisticated financial systems could potentially leapfrog directly to digital currency. Just like many African countries skipped landline phones and went straight to mobile, China could offer these countries access to modern financial services through the digital yuan, creating new economic relationships and dependencies in the process. And because the digital yuan is programmable, China could theoretically build in features that make it more attractive for certain types of transactions. Imagine a digital currency that automatically settles trades, handles currency conversions, enforces contract terms through smart contracts, or even provides instant access to credit for approved transactions. That's not science fiction. That's what China is actively developing right now. They are essentially building a next-generation financial operating system that could make the current dollar-based system look as outdated as fax machines. Now let's zoom out and look at what other countries are doing, because China isn't alone in this shift away from the dollar. There's a broader trend happening where central banks around the world are diversifying their reserves and reducing dollar dependence. Russia has been one of the most aggressive players in this space. They've dumped hundreds of billions of dollars worth of US Treasury bonds and used that money to buy gold instead. Before the recent Western sanctions, Russia had reduced its dollar holdings by about 90% and increased its gold reserves to become one of the top 5 holders in the world. They've made it absolutely clear that they see gold as protection against Western financial pressure, and events have proven them right. India is another major player that's been quietly repositioning itself. They've been buying gold consistently, adding hundreds of tons to their reserves over the past several years. They've also been participating in trade agreements that bypass the dollar, including deals with Russia where they pay for oil in rupees, or through barter arrangements involving commodities. India is trying to position itself as a neutral power that can work with both the West and the East. But they're definitely hedging their bets by accumulating precious metals and diversifying their currency exposure. Even traditional US allies are getting nervous about dollar dependence. Central banks across Europe, Asia, and the Middle East have been buying gold at levels we haven't seen since the 1970s. Last year alone, central banks collectively purchased over 1,000 tons of gold, which is an absolutely enormous amount. This isn't random behavior. This is coordinated action by sophisticated financial institutions run by smart economists who see something coming and want to be prepared for it. Turkey has been particularly aggressive in this regard, adding massive amounts of gold to its reserves while simultaneously reducing dollar holdings. They've been bringing gold home from foreign vaults and storing it domestically. Poland has repatriated hundreds of tons of gold from the Bank of England and brought it back to Warsaw. Hungary has increased its gold reserves more than tenfold in just a few years. The Netherlands brought home a significant portion of its gold from New York. These are countries making strategic decisions based on their assessment of where the global financial system is heading and what risks they need to protect against. Even some developing nations that traditionally held very little gold are now building reserves. Countries like Thailand, Kazakhstan, Uzbekistan, and Qatar have been adding gold. This represents a fundamental shift in how central banks think about reserves and risk management. For decades, the conventional wisdom was that gold was a barbarous relic and that modern central banks should hold their reserves in interest-bearing assets like treasury bonds. That orthodoxy is being challenged in real time as more and more central banks decide that the security of gold outweighs the returns from bonds. So what does all of this mean for the average person watching this video? Why should you care about central banks buying gold or China setting up currency swap agreements? Because the implications are absolutely massive for your daily life, your savings, your job, and your future economic security. If the dollar loses its status as the global reserve currency, Americans will feel it immediately and dramatically. The primary benefit of reserve currency status is that it allows the US to run enormous budget deficits and trade deficits without facing immediate consequences. America can print money, run up debt, and import far more than it exports because the rest of the world needs dollars and will accept them as payment. The US enjoys what former French Finance Minister Valéry Giscard d'Estaing called an exorbitant privilege. This privilege has allowed Americans to enjoy a higher standard of living than would otherwise be possible. If that changes, if countries don't need to hold as many dollars anymore, then all those trillions of dollars that are currently sitting in foreign reserves could come flooding back to America. That would cause massive inflation, potentially on a scale we haven't seen in modern American history. Think about what happens when supply and demand get seriously out of balance. If the supply of dollars increases dramatically while demand decreases, the value of each dollar falls. That means your savings lose purchasing power rapidly. The money in your bank account might nominally be the same, but what it can actually buy could shrink by half or more. The cost of imported goods, which is basically everything from electronics to clothes to coffee to fuel, would skyrocket. America doesn't manufacture most of what it consumes anymore. Those products come from overseas, and if the dollar weakens significantly, importing them becomes much more expensive. Your iPhone could cost twice as much. Your car could become unaffordable. Even food prices would spike because America imports significant amounts of produce, coffee, seafood, and other items. Interest rates would have to rise dramatically to attract foreign investment and convince people to keep holding dollars. Higher interest rates mean mortgages become incredibly expensive, potentially putting home ownership out of reach for millions of people. Car loans would carry crushing interest rates. Credit card debt would become even more burdensome than it already is. The government would face a severe debt crisis because it could no longer borrow cheaply from foreign countries. We're talking about a complete restructuring of the American economy and the lifestyle Americans have become accustomed to. For people in other countries, the effects would be different but equally significant. Countries that have been holding large dollar reserves would see the value of those reserves decline, which is essentially a massive loss of wealth. Trade relationships would shift as new currencies become more important and the dollar becomes less central. New economic alliances would form based on shared interests in moving away from dollar dependence. Some countries would benefit enormously from a multipolar currency system where they have more options and more bargaining power. Others would struggle to adapt to the new reality and could face economic crises during the transition. Developing countries that borrowed heavily in dollars could face devastating debt crises if their local currencies weaken against the dollar during this transition period. We could see waves of sovereign defaults and economic chaos in vulnerable nations. On the other hand, countries that position themselves well by diversifying reserves and building strong trade relationships with China and other rising powers could find themselves with new opportunities and enhanced economic security. The transition probably won't happen overnight with some dramatic announcement or sudden collapse. These kinds of seismic shifts in global finance usually take years or even decades to fully play out. The British pound didn't lose its reserve currency status in a single day. It was a gradual process that accelerated after World War II, when Britain's economic position had weakened and America's had strengthened. The same kind of gradual transition is likely for the dollar, though the pace could accelerate if there's a major crisis or shock to the system. China is not going to suddenly announce that the yuan is now gold-backed and everyone should stop using dollars immediately. That would cause immediate chaos in global markets and could potentially trigger military conflict. Instead, they're gradually and methodically building the infrastructure and relationships that will allow for a smooth transition when the time is right. They're being patient and strategic, playing the long game while America seems focused on short-term political fights and quarterly earnings reports. Think of it like building a new bridge while the old bridge is still standing and carrying traffic. You don't demolish the old bridge until the new one is ready to handle all the vehicles. That's exactly what China is doing. They're building the new financial bridge piece by piece, testing it with increasing amounts of traffic, strengthening it based on what they learn, and gradually shifting more weight onto it. When the new bridge is fully ready and proven reliable, the traffic will naturally start flowing in that direction because it's a better, more efficient route that offers advantages the old bridge can't match. The question for individuals is what to do with this information. Some people are buying physical gold and silver as a hedge against currency devaluation and financial system instability. They're treating precious metals as insurance, keeping a portion of their wealth in a form that can't be printed away or frozen by government decree. Some are diversifying their investments across different currencies, assets, and geographic regions rather than keeping everything in dollar-denominated holdings. Some are learning new skills that will be valuable regardless of what happens to the financial system, focusing on practical abilities that provide value in any economic environment. Some people are paying attention to geopolitics and economic trends in a way they never did before, recognizing that these big picture developments will shape their personal financial outcomes. They're reading about international relations, studying monetary history, and trying to understand the forces that drive global change. They're having conversations with family and friends about these issues, spreading awareness and helping others prepare. What you definitely shouldn't do is panic or assume this means the end of the world. Financial systems evolve over time. Power shifts from one nation to another. These transitions have happened repeatedly throughout history, and humanity has always adapted and continued forward. The Roman Empire fell, but European civilization continued and eventually flourished during the Renaissance. The British Empire declined from its peak, but Britain still exists as a prosperous nation today. The dollar-based system will eventually be replaced by something else, but life will go on and new opportunities will emerge. The people who do well during these major transitions are the ones who see what's coming and position themselves accordingly. They're the ones who adapt to new realities rather than clinging to old assumptions. They're flexible, informed, and willing to change their strategies when circumstances change. The people who suffer most are the ones who assume everything will stay the same forever and fail to prepare for inevitable change. They're caught off guard when the old systems no longer work the way they used to. China clearly sees what's coming. Their leadership thinks in terms of decades and centuries, not election cycles and quarterly reports. They're preparing for a world where they're the dominant economic power, where the yuan is a major international reserve currency, where gold backs that currency and gives it credibility that fiat money lacks, and where they have the infrastructure and relationships to support global trade on their own terms. Whether you agree with China's political system or not, Whether you like their government or not, you have to respect the long-term strategic thinking they're demonstrating. The United States, on the other hand, often seems to be operating on autopilot, assuming that dollar dominance will last forever simply because it's lasted for 75 years. That's a dangerous assumption rooted more in wishful thinking than historical reality. Every empire in history thought their system would last forever, right up until the moment it didn't. The Romans couldn't imagine their empire falling. The Spanish thought their gold-fueled dominance was permanent. The British believed the sun would never set on their empire. All of them were wrong, because they failed to recognize that power is constantly shifting and that maintaining dominance requires constant adaptation and strategic thinking. So here we are right now, watching this slow-motion financial revolution unfold in real time. China accumulates thousands of tons of gold and silver while barely anyone notices or understands the significance. Russia builds alternative payment systems and reduces dollar dependence. India quietly diversifies its reserves and hedges its bets. Central banks around the world buy precious metals at record levels that would have been unthinkable just 10 years ago. New trade agreements bypass the dollar in ways that seemed impossible during the height of American financial dominance. Digital currencies emerge as viable alternatives to traditional money, and most people have absolutely no idea any of this is happening because they're focused on the latest celebrity gossip, sports drama, or viral social media content. But you know now. You've seen behind the curtain at what's really happening in global finance. You understand that the financial world you grew up in, the one that seems stable and permanent, might look very different in 10 or 20 years. The rules could change. The dominant players could shift. The currency you use and the economic system you operate within could transform in fundamental ways. China is making its power move right now, and it's not subtle once you know what to look for. The gold purchases, the silver accumulation, the infrastructure investments, the trade deals, the alternative payment systems, the digital currency development. It's all part of a comprehensive strategy to reshape global finance in China's favor. They're not hiding it, they're doing it openly. They're just counting on most people being too distracted or too uninterested to notice or care until it's too late to matter. What happens next will depend on how America and other Western nations respond to this challenge. Will they recognize the threat to their financial dominance and adapt their strategies? Will they try to maintain the status quo through military pressure or economic coercion? Will they find a way to coexist in a multipolar currency system where power is more evenly distributed? Will they reform their own economic policies to address the weaknesses that make alternatives attractive? Nobody knows for sure how this plays out, but the decisions made over the next few years will determine the economic and political landscape for generations to come. One thing is absolutely certain though, change is coming to the global financial system, and it's coming faster than most people realize or are prepared for. The question isn't whether the dollar's dominance will eventually be challenged. That's already happening. The question is how quickly the transition occurs, what replaces the current system, and whether you'll be ready when it does.